Ready to make your money work for you? You're in the right place. So, what's a bond? Think of it as a loan you give to a company or government. They promise to pay you back with interest. It's like being the bank. First, decide what kind of bond you want. Government bonds are super safe. Corporate bonds, they offer higher returns but come with a bit more risk. Next, check the bond's maturity date. This tells you when you'll get your money back. Short-term bonds are less risky, while long-term bonds offer more interest. Look at the bond's rating. Ratings like triple a mean low risk, kinda like an A+ in school. Lower ratings, more risk, but potentially more reward. And don't forget to diversify. Spread your investments across different bonds to manage risk. Finally, keep an eye on interest rates. When rates go up, bond prices go down, and vice versa. Timing matters. So, ready to start investing in bonds? It's a steady path to growing your wealth. Happy investing. And remember, always do your homework or consult a financial advisor. Your future self will thank you.